Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Josh Cohen of City Light Capital. Josh, thank you for joining us.
Thank you for having me. I appreciate it.
Great. What was your background before you got involved in early stage investing?
So I started my career doing an investment banking analyst stint at Alex Brown in the late 90s, and then ran a corporate development group for one of our banking clients, a company called Mobility Electronics. From there, I joined a private debt firm. We sold part of that firm to a family office and wound up starting City Light Capital in 2004.
Great. So City Light Capital is in the impact investing space. What led you to start investing in that sector?
So in beginning of 2004, we were talking about 9/11, the events at Ground Zero, and what the world would have said about us if we were in the buildings being the Twin Towers. I didn't think that we had good enough answers, candidly. So I was on this trajectory in my career where I was going to work in tech and finance, and I was going to make a lot of money. And when I was 70 or 80 years old, I was going to become a philanthropist and affect change in areas that I knew I already cared about. And I'm sure there were a lot of people who showed up for work on the morning of 9/11 that were on the same trajectory, and through no fault of their own, they weren't able to get there. And I felt hypocritical, candidly. And so kind of looked in the mirror over time and said, I should do something about that. And that was the birth of City Light Capital.
So we always have investors listening to these podcasts and always looking for advice, and wanted to see what would be your advice to those who are thinking about investing in the impact space. What would you tell them?
I mean, I think it's harder than investing in the traditional venture space. And I think investing in the venture space is quite difficult. I mean, these are investments that you wind up investing in holding for 5 to 8 years on average. And so it is not for the faint of heart. It requires a tremendous amount of focus, and you should invest in things where you think you can affect the outcome. Not that you're looking for an operating role, but if we can create an arbitrage between the purchase price and the value that we can influence or generate, that we think we can increase our odds. And so we've learned a lot over the last 15 years. We stick to kind of what we know. And so for us, that means investing in early stage technology companies backed by experienced entrepreneurs in the areas of safety and care, education, and environmental companies, where more revenue equals more impact at scale every time.
Well, we see impact investing coming up strong and replacing nonprofits and becoming a big force, but how do you see the impact investing space evolving?
Well, for starters, I don't see it replacing nonprofits. I actually think that nonprofits and for-profit companies should be partners in solving some of the most audacious problems that exist. I don't think that for-profit companies should take the tact, nor do we take the tact here at City Light, that it's a better way to solve problems. I think there are different tools required for different types of problems in different circumstances. And so there's certainly problems out there that for-profit solutions are not adequate for or not appropriate for. We just happen to focus on only those opportunities where for-profit tools and the right teams leveraging technology can play a meaningful role. But that's a fraction of the overall problems that need to be addressed, and government players and nonprofits can and should play a meaningful role across the spectrum.
What are some examples where the impact investing is really the best tool for the job versus profits or nonprofits out there? Are there any examples you can bring up?
Yeah, I can give you an example of some companies that have had success that we've been involved with in the for-profit landscape. And in most of those cases, we're partnering with nonprofits and government entities. In fact, in the first example, the government entity is by and large our largest client. And so we were early investors in a company called ShotSpotter, which is in the business of acoustic-based gunshot detection. And so literally what that means is we put a series of network microphones in inner cities throughout the world that listen for the muzzle blast of a gun. So a gun is fired, the sensors hear that sound, triangulate, and we can dispatch an officer to the location where the gun is fired seconds after it goes off. Now, why that matters is less than 20% of gunshots are called in, and we hear them roughly 100% of the time in our coverage zones. This was important to me for a few different reasons. One is this was an early company investment we made. We made this investment in 2006, and it helped kind of solidify our thesis and give us additional conviction that we were on a meaningful path. Secondarily, the people that I've met through this investment have wound up becoming co-investors and partners that have only strengthened over time. And third, it's been a financial success and a success from an impact perspective. And so ShotSpotter is now a publicly traded company on the NASDAQ under the ticker SSTI. You can see on the ShotSpotter.com website, they actually publish their impact data on an annual basis through a gunfire index, which has been incredibly helpful to the field.
So in general, for impact investing, what's your investment thesis for it? What are you looking for?
Yeah, so we are looking for very large addressable markets. We're looking for experienced teams that have relevant domain expertise. We do underwrite, much like other venture firms, to a 10x return profile. We just care a lot about how we make the money. And so we're only looking at those investments that can have measurable social impact through the implementation of their core product or core technology with a business model consistent with the implementation of that product or technology. So it does reduce our sample set and reduce our investable universe. But when you get it right, not only can you make significant financial returns, but you can help millions in a positive way in the process.
So one of the challenges in the impact space is aligning what the investor considers the impact and what the startup considers the impact. I've seen a startup with an impact investing model, but having a challenge finding the right investor for it because the view of what impact needs to be accomplished varies. How do you manage that process?
I think for starters, we try to be very clear with what our version of impact means. And for us, it's product-based solutions in the areas of safety and care, education, and environmental companies, where the impact comes through the implementation of that core product or core technology and is consistent with how the company makes money. As part of our criteria in investing in the companies, they're obligated to report to us on their social impact in addition to their financial progress. And those metrics come from the companies themselves. And so the way I like to think about it is it's almost like I'm pouring salt on a piece of fruit. And so if I was to put a little bit of salt or the right amount of salt on a piece of pineapple, it would taste like the most wonderful pineapple you've ever had because it pulls all the flavor to the surface. There's no amount of salt I could put on that pineapple that makes it taste like an apple. And if I put way too much salt on the pineapple, it's inedible. And so the impact comes from the team, right? We just try to figure out how to make it the best possible team to help them accomplish their goals. But if their goals aren't aligned with our definition of impact, then we're probably not the right partner for that entrepreneurial team.
Well, there's lots of impact opportunities out there. What do you see as some of the immediate ones that startups should be pursuing that you think is a good fit for impact investing?
So we're often gravitating towards cutting edge technology solutions being applied to areas where we have domain expertise. At the moment, we're looking at a bunch of things involving VR and how that can affect workforce development or how that can affect corporate training, things like that. We are incredibly interested in the role technology can play in mental health and providing more accessible, more affordable solutions to the 20% of Americans who require that kind of assistance. We're spending a lot of time looking at the addiction space. And so one of the things that's most encouraging to us is we're constantly seeing better and better entrepreneurs tackling things that are both aligned with our thesis, but also have the potential to benefit millions of lives.
Well, that's great. It sounds like the impact investing world is working well. Where do you see your group going? Are you continuing to work in the same area, or do you see it expanding the role in some way?
We are. So we're going to stick to those sectors. We're going to release a few technology products over the next few months that will enhance our ability to allow entrepreneurs to better articulate and measure their impact. We're going to increase our presence in the seed marketplace. And so my expectation is we have a product offering there that allows us to back hundreds of companies over time. And we will continue to invest in safety and care, education, environmental companies at early and growth stages as we proceed over the next 10 years.
Well, that's great. It's good goals there. What else should we cover that we haven't so far?
I just appreciate the opportunity. I admire what you do. I'm jealous that you could spend a lot of time in Austin, Texas, and keep us in mind for those entrepreneurs out there that are trying to build massive financial stories that can help millions of people at the same time.
Great. We'll put in the show notes your website and your LinkedIn profile so investors can get back in touch with you and listeners can reach out. I know a lot of impact startups that are struggling to put together their social metrics and their social impact and actually get a handle on that. Any parting words to them for that and how they should do that?
Yeah, stay tuned and keep track of citylight.vc. We're going to have some tools available to help you do that over the next 60 to 90 days.
Great. Looking forward to that. Thank you so much. And look forward to having you back for a follow-up soon.
Wonderful. Thank you very much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.